Hi traders, good morning, good afternoon, good evening. I hope all of you are doing good. I know it's been a while that I have not been posting videos because I have been busy with a lot of things, and God has blessed me with a beautiful baby girl. So that's what was keeping me away from the markets and you guys. So let's cover it up. Today I'm going to make an interesting video where first we'll analyze Nifty Bank Nifty, and as well as I will teach you a technique where you can actually uh, know the fair price of a stock by using certain parameters. This is a kind of a secret which I have learned from one of my masters, and you don't find it on YouTube anywhere. So it's a special formula which I'm going to show you, and you need to be ready with your at least pen or pencil with a notebook so that you can note down what I'm trying to tell you for that. So that will be on the second part of this video. So without further ado, let's get started. As you can see, I have removed all the indicators, and I have removed uh, all the even we don't need this volume bar. Let's do analysis basis pure price action. For those who have been following me for a long time now, so they understand what I'm talking about. Price action is about reading the candlesticks charts, and I have also been posting the patterns which you need to follow on a regular basis to understand the movement and the behavior of price. So what are these candlesticks which are telling us? If you look at any candle like this, where there is a body which is small and there is a long wick, that means the price opened here, okay, open here, but it was not able to close at this level. So there's a lot of selling which came from this level. Okay, usually for a candle, open green candle, the open will be bottom and close will be high. For a red candle, the open will be high and the close will be bottom. So here lot of selling came immediately on the first candle, and this was holding as a resistance point. You can map this particular wick and note it as a resistance. The price came into this zone again, and from there it started falling. So that's how powerful price action will be. If you remove all the clutter, you will be able to understand. This is a very significant bar. As you can see, it has dropped into this level, and there's a lot of buying which came in. If you and me want to make this kind of candle, it will not be possible. You need a lot of money to do this. That means somebody is selling short and somebody is continuously buying at whatever price. They're accumulating. If they are accumulating, that means they have a lot of money here, and that money is been pumped in at this level, and the price will go up. And immediately if the price go up, a lot of retail investors may jump in. Looking at this pattern, it's not only you and me who are watching these patterns, everybody is watching. So they would try to trap you, by making such kind of candles where you lose confidence and close your trade. But later they will not give it to you in easy fashion, but you need to have that kind of will that you hold on to the trade till it gives you. If your conviction is right and your levels are correctly marked, then definitely hold on to your trade. So let's do one thing. Let's draw the lines on higher time frames. Let's go to a 1 hour chart, okay, and let's look at which are the places where we have find narrow range candles, that means narrow body candles. Okay, we need to mark those. Okay, so this can take the high and the low of this. So these are called as 50% candles. Here there is a fight going on between bulls and bears, and both have to give up. They have not won in this 1 hour. Next 1 hour also not won, and third 1 hour candle, bears clearly won this. Okay, after this zone is formed, the price will always retrace back to this zone for the orders to get filled. So somebody was shorted here at this price, say 17884 is my price where I'm shorting, and I have 4000 quantity filled, another 6000 is pending. The price will come back to that level because liquidity will be the problem. Okay, so it will come for the liquidity again. It will get a lot of selling available here, and then it will start going down. So here you can get an indication that it is clearly going down. Now next, which is the level where it has actually spent time? Okay, so the level has to be fresh. If I mark this level, okay, this was a very narrow range candle, this level is again touched. Okay, on the left, this is the demand zone. So this demand zone is already touched here once, twice it has been touched, and you can expect the market to move up into this zone. So you see there is a tight zone where the market is going up and down, and you need a breakout above this level for it to go higher, which is above the 18,000 levels, and then something below this levels will be shorting opportunities, and you will have all these gaps which can be filled. So this can be a good level. If it breaks this, and it will come to this level. So once we mark this on a higher time frame, you can always come back to the lower time frame to see how it has spanned. So now I have marked this level on the higher time frame, but you can see how many candles are there. So all these candles put together is making a 50% candle, because there is selling buying happening, and it is not going anywhere. So whenever you dissect a candle like this at a higher time frame, it will be a bunch of candles like this. Okay, so here you can see it has nicely dropped into the zone. Before, when I was saying that this candle is a selling or a buying place, you wouldn't have understood, but once you mark these levels, see how convenient is it for you to understand that देखो भाई, it has come into this demand zone और यहाँ पे मेरे को खरीदना है. Okay, if you made up your mind that this is the level where I'm going to buy and this is the level where I'm going to short after marking this, so you see you're ready whenever the price comes, or even if you put a limit order here, it will get executed with a small stop loss about this level. Then you manage your risk to reward. No, you manage your risk to reward with this kind of tools, like short position. You take a short here and your stop loss is just above this level, and your target can be this level. So you're getting a nice 1:2 risk reward is 1:3 ratio. Okay, losing one and getting 3. So this way you can easily mark your levels. So isn't it simple that way for you to actually mark these levels? And anybody who is doing this on any stock can easily do it. So right now, if we look at the market, it is taking a support here, okay, which we have marked. Okay, so this was a support. This tiny candle was the place where so many candles have formed. So this has taken a support here, and this is our resistance level. So this is marked. Okay, अभी बैठे रहो. Whenever it touches this, you go for selling and put your stop loss there, but you need to see the momentum. If it goes into this zone also, it is going to stay here for some time. Okay, so RSI is not RSI has to be above 60 if it is going into this zone, and any breakout above 18,000 will be huge up move. Okay, so that's about the analysis, like how you can do it. Use a simple chart, use your brain to map levels, not a complicated stuff. Don't map too many indicators to know things. So within this simple way, you can manage your risk to reward and trade. So that's how you have to do. If you want to see Bank Nifty, it will be also, Bank Nifty might be a little different. It can be a little positive. Let me do the analysis here. So you see this is a zone, same third candle, they lost the battle, but here the level is here. This is a good level. Previously it was a resistance also. So if at all market opens here, you can expect certain rally again back. Okay, usually what they are doing is, a lot of people will have stop loss below this. They might open the Bank Nifty at this level, triggering all the stop losses, and then go up. and the RSI is also pretty solid for Bank Nifty as of now. So let's wait and watch. Let's see how it spans out on Monday. It can open here and it can go up. So now coming to the second part of the video, like how do you actually look at the fair value of any stock. So I am showing you a good tool today which is called as Screener. Okay, this is a free tool and you can actually register on this with your Gmail, and the best part about this tool is that they have multiple filters available for you to actually see. If you want to invest in stocks, imagine that which are growing quarter on quarter, that means they have profitability quarter on quarter. So isn't it good to invest in those companies which are giving you quarterly profits and they're consistent? So how do you find them? So you can actually go to this quarterly results screener. You can have highest year on year quarterly profit growth, quarterly growers. So you can click on this and best of last quarter, all latest quarterly results. You can use this as a scanner for investment purpose. So now when I clicked on this, so quarter 1 is greater than quarter 2 is greater than quarter 3. So these are the stocks, 228 stocks, which can be from mid cap, small cap, anything, and they are pretty much growing quarter on quarter. Export this, do your analysis, and you try to find out what is the fair value of the stock. If you find fair value means that if something is priced at say for example, let me just open my Epic pen. So if you say something is priced at say about 2000 rupees today, okay, and this you want to see whether this current market price is correct as per the valuation of the company, or is it higher or is it lower. So this, to identify this, that is the fair price of the stock, fair price. Okay, some of you might can say fair value also, but we are trying to get the fair price of this stock. If we get a fair value of say the stock price should be 1400, then definitely if you invest in this stock you are going to lose, because some one correction it will come back to this zone. And if you get a fair price saying that this stock fair price is 2500, so you can easily add on this and wait for it to touch this. So that is the concept which we are going to talk about today. So let's understand this. Let's take any of the stock from here. Let's look at the current market price. For example, I will take any one stock. For example, let's take Tata Elxsi. Okay, let's take Tata Elxsi. When you click on this, you will get to this field where it will give you market cap, current price, high, low, stock PE, book value, everything. So now listen to this very carefully. Have your Excel open. Okay, so I'm going to show you my Excel which I have created. So what are the things you need? You need current market price, you need P ratio, you need earnings per share. Okay, in this you need latest EPS, you need 3 year before EPS, difference of this 3 years growth, and what is the yearly growth is going to come from the formula. So what I'll do is I will first try to fill one by one so that you understand this. Okay, let's do this for Tata Elxsi. So what are we doing? Tata Elxsi. Okay, so what is the current market price of Tata Elxsi? Current market price is 8817. Okay, so let's 8817. And what is the PE? P is about 88.4. It's 88. 0.4. Okay, latest EPS, latest earning per share is 99.7. Usually I look at this EPS. If you scroll down, you'll get quarterly results, balance sheets. It's a beautiful tool. You need to analyze all the stocks. So EPS today is about 99.7. so we put this into our Excel. 99.7. now we have to look for 3-year earlier EPS. so this is 3-year earlier EPS. what was the EPS 3 years back? So we are in March, first year, second year, third year. So what was the EPS before that? It was 41.1. so this is what we are going to put here. This will be 41.1. so now what is this formula? What is the difference here? We are minusing B4, that is latest EPS minus 3 years EPS. so we get 3-year growth percentage. so this is our 3-year growth percentage. now we take this 3-year growth percentage and divide it with the difference. Okay, so 3-year growth percentage, we get this. Again, if you want to understand, D4 divided by C4, that means difference divided by 3-year before EPS. so we get the percentage 143%. now how much is the yearly growth? We divide it by 3, so we get 48%. and what is the fair value multiplier? We have to get the fair value multiplier. This is the formula: current PE 88 yearly growth percentage divided by PE, which is 88%. so the fair value multiplier what we get is 0.54. now what is the correct price of this stock? You just take current market price into fair multiplier. so it is 4740. okay, 4740 is the actual price of Tata Elxsi. so you should be targeting to buy Tata Elxsi at this price only if you want to invest in this company, because it's already highly inflated. If you see that, okay, did we make any mistake, or should we take, instead of this, should we take this one, or should we take 88.26 and then take 46.56? we can do that as well. Let's try that, just to ensure that we are doing it right. I'm sure some of you might have doubts about it, so let's do it in that fashion. 88.26 88.26 and 1 2 3, we take 46.56. 46.56. now the fair value still comes down, so it cannot be 2977. so definitely the previous one is the right one what we did. so you can play around like this for a couple of other stocks also, whichever you find that. Just a second, guys. So let's try to do it for another stock which we think will be good. Let's take some other stock which is at a lower price. Maybe go to a next page and see. Let's do an analysis of something like this. Make money finish. So this is make money finish. Okay, What is the current market price? Current market price is about 1516. This is about 1516, 516, and our stock PE is about 19.5, 19.5, and latest EPS is about, let's go to this, 77.8, 77.88. And what is the 3-year earlier EPS? 1, 2, 3. So let's take 27.19. 27 point. So this stock has grown like 62% yearly growth, which is pretty decent, and the current market price is about 4831. Okay, so this is a fair price of this stock, Meghmani. So this is a very good stock. If you think that we should take 1, 2, 3, let's take 2021 and see what is the value coming in. 24.48. So it should not be that difference. 24.448. So here it becomes 5000. So it's pretty high, and we have to look at what is this company all about. They are appearing into companies expected to give good quarter result. Company has good return on equity, ROA, track record 3 years. Return on equity is about 23.3%. Stock is trading at 8.6 times its book value. Though the company is reporting repeated profit, it is not paying out dividend. Company might be capitalizing the interest cost. So you can see the company's growth in the last 10 years. So this is a good company. If you want to see what is their fourth largest manufacturer of chloralkali and its derivatives company in India. So see, once you do this research, and then you will find these kind of stocks where you can actually fine tune and then invest. So there is a logic to investment which you can do. So that's it for today, guys, and I hope you have enjoyed this video and learned something new. And trust me, you won't find this anywhere on YouTube. It is difficult. I'm going to caption it as fair price of a stock, so you can actually search and see if you can get it. So thank you so much for watching, and keep motivating me by liking my videos and sharing my videos. It takes a lot to make a video, and definitely I'm taking my time out to give this knowledge to you guys. And please do subscribe and share. Thank you so much for watching.